Hello,
Hi,
my name is Shivani.
I'm Miranda.
We are far from normal. Thank you for coming to this episode of our business series.
Yes, I think it's part 6.
Yeah, no, we are very far into this series, and we're so excited to keep going with it. Today, we wanted to invite a guest to speak on investments, portfolios, and growing your wealth. And I thought of the perfect person to ask, and his name is Dr. Prakash Muduli, also known as my dad. So, yeah, would you like to introduce yourself?
Sure. Thank you for inviting me. I was not sure how I'm going to do this one because you're my daughter. So, and about myself, I'm a financial advisor, and I've been doing this for the last 5 years. And I love educating people, helping people to save money for their retirement, for college education, wedding, whatever. How do you grow your money, protect your money? I do that for all the families and business owners.
Yeah, that's awesome. So what did you do before you were a financial advisor? How did you get into this profession, and why did you want to do it?
Quick little bit of background. I originally came from India, right? I have engineering background, and I studied actually engineering. I went to Columbia University. I did my PhD. I worked for actually Caterpillar. It's a big company. If you're pretty familiar with it, they're out of Chicago right now, headquartered. So I did work for almost 18 years. And I always had interest in finance. I used to study on my own, from the school time, right? Look at, stock market, bond market, how the investment works. I was almost studying for 20, 30 years, and I took, interest, I started like 5 years back. The more I learned about it, I started liking it. I kind of gradually moved away from corporate job to become finance advisor.
That's awesome. Yeah. So, would you have any questions? Sorry, I'm so sorry.
Did you say you worked in corporate finance at one point, or have you always worked in personal finance?
No, I didn't work for corporate finance. I worked, regular job. I started with, did a supply chain. I did marketing, product support, then managing a group. So more on the management track, not in finance. Okay, not in finance. So when I talk finance, I'm talking personal finance, right? Just to clarify, when it's a finance for the company, it's different than finance for personal, right?
Yeah.
So when you say finance for a company, you're growing their business, not your own personal money, right? So what I did was the personal finance. Yeah.
So why do you think people and families would need a financial advisor, and why is it important?
Yeah, many reasons. For the same reason, you would go to your doctor, right? Because if you look at the doctors, they spend almost 7 to 8 years understanding basic, going to practical, a lot of training happens, right? A lot of nuances. So many times in the finance industry, same thing. There are a lot of complex area, talking about rules, regulation, investment, how it works. To understand the entire field, it takes years, just like any other field, right? So when you go to finance advisor, there's no all these nuances, all the details, which typically you will not be able to figure out, when you're doing on your own. So it's always helps to consult advisor, finance advisor. If it's a simple thing, maybe not, but if you're thinking about putting together your future plan, which is going to happen, over 20 or 30 years, it's good to have a plan, right? It's a blueprint. So always it makes sense to have an advisor. There's a saying actually, over long term, if somebody's consulting advisor, they typically come out 2 to 3% more return compared to if you do it on your own. Okay. So going to your advisor, staying still the fee, still you come out ahead, right? So I give a good analogy, like, if you want to, train yourself, physical fitness. Okay. If you do it yourself versus going to your personal trainer, which is more chance of successful?
Yeah, the trainer.
Right?
Yeah.
You have more chance, right? You're more likely, you'll do it in a more correct way, structured way, don't do any mistakes, and you're more likely come out successful, right? Versus you're doing on your own, first you may not have motivation, right? So,
Yeah.
Can you generally give us an introduction to the different kinds of tools that you use for personal investment for those of us who don't have any experience?
Yeah, definitely. I'll be glad to. So typically, let me explain the how the planning works. So typically, when the planning, we start from something called goals, right? You start from the goals. What are your goals, first of all? Okay. When I say goals, goals could be many things, right? So goals, hey, I'm saving for my retirement. Okay. Which just means could be when you're age 60, 65. Other goals could be I'm saving for vacation. I'm saving for my kids' education. I'm saving for buying insurance or saving for a house, right? So these are various goals. That goals varies from people to people. Okay. We start from there first. Okay. For every goal has a different investment strategy, right? Let's say you're saving for vacation, which you won't take in 3 years, versus saving for getting education, going to retirement, right? Two different goals, right? So your investment would be totally different. Strategy would be different. One would be aggressive, one would be less conservative. So that's how you start from. Okay. Then once you decide what are your goals, then get into details as to what investment vehicle. The more details. We want to save tax now, tax later. So I don't know how much detail I want to go into, but I just want to explain the overall thought process first.
Yeah,
I'll start from the goals.
sorry. Yeah, no, for sure. I learned most of this just because you've taught me, and I've learned through different classes and books and things like that. And learning about personal finance is super important, and not a lot of people really understand it or take time to really understand it. So it's very much needed and very much.
Yeah, a good example would be on that topic. How saving early, okay, makes a big difference, right? There's actually some numbers that kind of blows your mind. Somebody started saving, let's say, age 25 versus somebody starting at age 35, 10 years delay makes a hundreds of thousands of difference money.
Right.
Okay, so starting early and the power of compounding makes a huge difference.
I mentioned in a previous episode how I was trying to talk about like the concept of like the time value of money and like how like maybe a cent now is not going to be worth the same in the future. So I mentioned something like that you're going to want to aim above what you think you need just because of inflation and the economy changing. What are your thoughts on that?
No, you're correct, because there's a time value of money, right? So whatever the dollar today, what buys you today won't buy the same 10 years down the road because all the price goes up, right? It was if you look at typically, food price, for example, right? Especially, food price has gone up significantly, right? So which means if you're investing your money, make sure that your money is growing at least the inflation rate, right? So that you keep up with the purchasing power. Otherwise, your same $100 will not buy you the same amount of product and service after 10 years down the road, right? So if you're investing, make sure that you're making money at least with inflation. Okay, I'm sure typically should target more, but at least at the inflation, right? So you're correct, yeah.
So is that how you approach like retirement planning? Would you like look at the inflation rate and help people plan to make sure they're like above that?
Absolutely. So what we do actually, because people cannot think of what the money would be 20 years down the road. So what I ask, okay, tell me if you retire today, okay, in current dollar. Don't worry about what will be when you're 65, okay? Tell me in current dollar per month, how much do you need you can retire, okay? They'll say, okay, I need 5,000 a month to retire comfortably. So I take that number, okay, I'll inflate myself, okay, saying that, okay, you said 5,000 by age 65, it'll say, okay, that 5,000 equivalent to 12,000 a month when you're 65.
Yeah.
Okay. So that means you have to grow your money, right? So there's a tool which does that automatically for you, or you can use a calculator. If you're pretty good in math, you can use a factor of, let's say, inflation going at 3%, right? So you can take 5,000, apply 3% every year for next 20 years, will tell you what is that number should be, right? Yeah, so we always ask people to think in terms of current dollar, because very difficult people to think what would be 20 years down the road. It's easier to say, okay, tell me in current dollar. The tools takes care of the rest.
Gotcha.
Does it make
Did
sense?
COVID mess up that inflation like predictions that people had?
I'm sorry,
Does
say that
it make
again.
it harder? Does COVID make it harder for you guys to understand the inflation like predictions and where it should be going?
I mean, short term, it's harder, but long term, we look at the long term inflation. So in US, has been pretty stable and low. It's about 2%, 2 to 2.5%. Yeah, because the pandemic has gone up because of the different dynamics, right? It's a short term, but long, you still get long term, right? Because all plans are long term. Short term, it hurts, right? Right now, for example, because of the pandemic, food price has gone up significantly and houses price has gone up significantly. So which means it's not affordable. Your wages, your income hasn't gone up, but the house price has gone up because of other dynamics. Yeah, short term it's difficult to predict, but long term it's been stable. You can use typically 2 to 3% assumption to calculate. Yeah.
So we were talking about like different types of like retirement vehicles. There's like the 401k, the IRA, and the Roth IRA. What are the differences, and how do you decide like which one to use?
Yeah, so there are different vehicles. There are different ways to look at the same thing. So one way to look at actually from tax perspective. Okay. So when I say tax, what investment do I do which will give me tax break now? Okay. Other investment, I don't pay tax in future. Okay. So tax now and tax in future. So you have to look at it from that angle. So 401k is the typical retirement account provided by the companies. Like if you guys work for a company, they'll have 401k plan. It's just a code, 401k is a code, IRS code, which allows to basically get a tax break. Okay, so let's say you're making $100,000. You say, I'm going to put away $10,000 into 401k plan, okay, which reduce your income to 90,000. You want to pay tax based on 90,000, not 100,000. Gives you a tax break now, okay, which is a good thing because you want to keep more money in your pocket, right? So that's one. If you want to invest in tax-free, it's called Roth IRA, okay? So 401k is like you get tax break now. Roth IRA, when you put money after paying the tax, in future you don't pay tax. So typically diversify. Okay. So you talked about IRA. IRA very similar to 401k, but you open on your own. It's not company sponsor. 401k typically sponsored through company if you're working for somebody. But there are a lot of nuances, but I'll keep it there. But under those buckets, you can invest into stock, bonds. These are just labels. 401k is a label. IRA is a label. Okay. Under that, you can invest into different vehicles.
Oh, I didn't know that. I kind of just thought they were just like accumulating money. I didn't realize that you would go into specific things within it.
Yeah. For sure. One of our other questions was just on like different investment vehicles like stocks and bonds and mutual funds and all that sort of thing. Do you suggest that we start learning about that at a specific time when we're at a specific financial condition, or do you think it's like never too early to start messing with that?
No, it's good. I think it's good to learn early because having that knowledge actually helps you start things early. Actually, I just listened to one of the, there was a seminar, the high school kids, 3 high school kids, they wrote a whole book on financial literacy. I was kind of amazed, there's so much detail. So that age, they're like 15, 16, 17 years old, they're learning so much, okay? But having that knowledge, it empowers you to take action, right? If I knew the power of compounding, okay, it'll compel you to start early, right? So that is a value proposition. And also when you're young, you have time, right? When you become, let's get into job, you married, have your kids, you get busy. You don't have time to learn about it, right? The sooner it's better always. Yes, definitely.
So just for people who like don't know like what stocks and bonds are, like how would you describe that?
Well, it's let's say stock, right? What is stock basically? When you buy let's say Apple stock, okay, which is I don't know how much running right now, $120 something. When you buy one stock, you have an ownership in the company, right? You're owning a piece of the company, right? That's what it is. Simple as that. You basically, you think that the company is good, they'll do well. You are basically saying, hey, I'm going to own a piece of the company. Okay. That's all it is. Okay. If the stock market goes up, then your value goes up, right? As simple as that. It's ownership into a company. So when it's a mutual fund is just another label. They can't say mutual fund XYZ. Under that, you may have hundreds of stock. Okay. So when you buy a mutual fund, then you automatically buy hundreds of stock within that. You don't have to do research to find which stock. Every mutual fund has an objective. Okay, is a mutual fund for growth? Is it for value? There are different objectives of different mutual fund. So advantage of that you're not doing research to those 100 companies. Somebody's doing that for you. Okay, when you buy one mutual fund, you buy multiple companies. But concept is same. You're owning ownership in a company.
Mm. And then bonds are governmental, and then
Private.
Yeah.
Bond could be government, could be also the companies also, right? Company also issue bonds. Okay. So the reason they issue bonds because they need money also. It's a company can raise money either through issuing bonds or through issuing stocks. Two mechanisms. They maintain, depending on strategy, you decide how much to issue through bonds, how many through stock, right? So bonds are willing to give you interest, right? So you, Shivani, say, hey, I want to buy a bond from company X or Apple, let's say, right? You give your money, they give you interest in return, right? Which is not guaranteed, but based on historically, you'll know, okay, they're giving 3 to 5%, right? Government is the same way. Government issues a bond, it's much more safer, right? Government, it's a lot safer. Okay. So yeah, bonds could be issued by government, federal government, or state government, or the companies.
Yeah. Bonds are the one where they have like a few years, right? Where like you
maturity dates.
Yeah. Okay.
Yeah. Go ahead.
That again,
bonds are the ones where you have like a few years on it, right? Before you get the money back.
Yeah. So there is a duration for it, or you can keep rolling it. Yeah, there are different kind of bonds. Typically, we'll say it's a short-term bond or a long-term bond. So there's a duration. It's called time. It could be less than a year, could be 5 years, could be 10 years. Yeah, it varies. And depending on that, the interest rate also changes. Correct.
Got it. So I know like we've talked about a little bit about like your just your profession as a financial advisor. Is there what are the main differences from going from working corporate and now like doing your business individually? And, like, do you have more freedom, and like how is that? What does a work week look like for you?
Okay. Yeah, so that's a good question because that kind of ties back to what I was telling, work for corporate job, right? Corporate job setting is different than what I'm doing right now, completely different. And so I had a choice also to become advisor for a big company, right? Let's say Fidelity. It's a good, then I become employee, right? It's just like as good as working for a corporation, right? So I did not want to be employee of any company. Okay, I want to basically be completely independent. So that's the major difference. Okay, so there's a pros and cons to that approach. Let's talk about the, first the negative side of it or the con side of it, right? Since I'm independent, then I have my income is not stable. It varies, right? It varies. There's not a paycheck coming up like a job, right? So that is the big negative, I would say. So you should feel very comfortable about that. Okay. So that is the risk I took, because with not knowing every month what my income would be. Okay. That is one. On the positive side, I would say there are more positive than negative. That's why I decided to be independent. One positive side, you're on your own boss, right? Absolutely, you're not reporting to anybody. You decide when to work, where to work, how long you'll work. Okay. Complete freedom, right? I can be on vacation, still working or not working. I make that call. It brings a lot of freedom. That's a huge difference in that. Okay. The other one, long term, the reason I like it because all my effort I'm putting in, I'm building that book of business. Right. I own that piece of business. Right. Right. So if I stop working, for example, let's say I am managing $50 million over next 10 years, that generates income for me. If I stop working, it still generates income for me. Okay. It's called passive income. So think about it. If I work for a company, if I say I'm going to stop working, will they keep paying me? Probably not, right? But I'm building my book of business, all my effort, it has a passive income later on. So that is very empowering.
Yeah, that's a really good point. I was just going to ask you about like expanding on like passive versus active income and like the importance of having several streams to make sure that you're set for retirement.
Awesome.
Yeah. So
awesome. That is actually that's true for not for financial industry. It's true for any business, right? Think of any business. So let's take example. Some people own McDonald's franchise, right? So if they own a McDonald's franchise, okay, that generates passive income, right? If you own a McDonald's franchise, of course you need money to buy that franchise. But let's say you have money, you own that franchise, you hired manager, hire all the people working for the franchise, that generates passive income, right? Then you can stop working, right? Meaning it's a passive income in a sense, right? And if you had a 5 McDonald's in different part of the US, okay, that generates passive income because you're not directly involved anymore. You're simply managing, maybe you hire a manager to manage it. So that is example passive income. So it's always to have something generate passive income. So that really creates true financial freedom, right? Active income means you're directly involved. If you stop working, money stops, right? So what is a good example of active income would be in your mind?
Active income, like you're working a corporate job.
Yeah, like working at Chick-fil-A or Kohl's.
Yeah, you know.
Right. So if you're working for somebody, that's active income. If you stop working, then it stops, right? So I always say I would recommend, go to do a job, but at the same time, constantly think about what are the different things I should be working on, which gives you passive income, right? Again, an example, a lot of people use investment as a passive income. There are investment vehicles you can put in. If you do it properly, it generates passive income every month also, right? Finance instruments. It could be through business, could be finance instruments, owning a franchise. There are many ways you can create passive income, right?
Got it.
What steps would you recommend taking to like a student or like a new college grad if they want to work as like their own boss in the future, like you do? Like what steps would they have to take?
What they have to do, or what field, or what you
just what's the path look like to get to a position where you can actually be your own boss
within a certain industry, or like within
the finance industry? Sure.
Financial services. Okay.
Well, the key ingredient actually, what I do, it's you need to be self-driven. You have to kind of drive that kind of mindset. I mean, there are some guidelines, but there's nobody can teach, determination, right? Mindset. So people who are open to those skills, it'll be successful, right? Because there are many opportunity, right? Financial, non-financial, right? So the key thing is that they should be understanding the importance of passive income. Okay, that's understanding has to be there first. Then you have to have the mindset that, hey, I need to work on something to create passive income, right? So start from there. Okay, if you have that kind of mindset, kind of determination, then you'll be successful in any industry. In finance industry, I take people, I can develop people. Okay, so many people come, get excited, but a lot of people drop out. Okay, the reason they drop out, they find it difficult because I give example like, how many people you think say in January 1, I want to lose 20 pounds, they say that, right? Then you probably January, if you go, a lot of people show up in the gym, all be running, right? But how many people do you think they continue long term?
Not many.
Same thing.
Yeah.
It's because it's driven by your own desire to be successful, right? First comes the understanding. They have to understand that I need to have passive income, right? And the way it works for me, give example, I had to first self-reflect as to explain why I need a passive income, what benefit does it bring for me?
Mhm.
That has to be reflected internally. Okay, that has to come from inside. When it comes from inside, it becomes very, very strong, because it doesn't really matter what kind of obstacle you come, because you are so convinced internally. Okay, it keeps you driving essentially.
Mhm.
So that I would put a lot of weightage on that. There are, of course, there is playbook, guideline, a lot of documentation that is there, but I said those are knowledge, but knowledge doesn't really conviction. Conviction has to come from inside.
Mhm.
That's what I went through, frankly.
Got it. Yeah. I just realized I forgot to ask you, because you deal with a lot of insurance as well. What is the importance of insurance, and yeah, why do you encourage families to look into that?
I'm glad you asked that question. So actually, I entered the finance industry, had an interest in investment. That was my, I like investment, stock, bonds, Then I studied insurance, right? I learned more about the insurance, and I realized that it's one of the foundational tools needed for every family. Okay, so let's talk about what is insurance. Okay, and I would say insurance nothing about people helping other people, right? So let's give me an example. Miranda, in your street, some family had some difficult situations. Maybe in someone's family, somebody passed away. Let's say they don't have money. Okay. So typically people jump in to help them, right?
Mhm.
They come to help whatever way, either food, money, or driving around, whatever. Okay. So instead, nothing. Basically, it's a pool of money people put in. Okay. And somebody needs it, the money comes from the pool. Okay. So let's talk about example insurance, the different kind of insurance. Let's talk about life insurance, a good example, right? I think you guys understand auto insurance very well. Why do you need auto insurance? Why do you need health insurance? Let's talk about life insurance. Okay. So life insurance is about something on, you know, like in a family, like somebody passes away. Okay, is the main breadwinner. Okay, that's the person who's to make 100,000 a year, and that person has a wife and two children. Okay, so what happens? Somebody pass away. That person pass away. Okay, it creates a lot of difficult situation, right? So typically we say if you don't have enough asset, if you haven't built enough asset, starting the job or starting a family, you haven't enough saved enough, right? So life insurance need the most. Okay. So let's say you're 65, you already have $1 million sitting on. Do you need life insurance? Probably not, right? Because you have enough asset already.
Mhm.
So insurance is a protection against having less asset. If something happens, it protects your family, right? It's very, very important.
Good. No, that makes sense. Yeah, and there's like also just like I mean, I was learning about insurance because I was starting to understand the same things that you were teaching, but just like the emotional aspect, having insurance can take care of like setting up funerals, so you don't have to think about that, and like you can take time to just really grieve over your family members or friends or whoever is involved, and it really just has a way of planning everything out for you, so then you don't have to worry about that sort of thing. So I think that's also super important to think about.
Yeah. So think about the family, what they go through, right? A
Mhm.
person who passes away, it creates a lot of burden for the family, right?
Mhm.
And people are working so hard to take care of the family, right? So if the person is not there, it creates a lot of difficulty for them, and also for society in general also, right? I mean, you wouldn't feel comfortable with somebody close to you is impacted, right? You feel stressed, you feel like you have to, help them, it it kind of stresses you emotionally, all financially. It impacts so many people, right? So buying insurance, that risk get distributed across millions of people, right?
Mhm.
So when I buy insurance, give example, I have insurance, right? I pay, let's say, $100 every month. Okay, that goes to a pool, right?
Mhm.
If somebody's dying, let's say, it goes for that pool. So people like me putting in that pool, $100, $100, $100. So insurance company having that pool, right? Not everybody's dying in one day, right?
Yeah.
Somebody passes away, it comes from the pool. That's insurance. So people helping other people.
Mhm.
It's basically managed by the insurance company, right?
Yeah.
It's as simple as that. So I say when you buy insurance, you're helping somebody, right? And you might get help in future. If nothing happens to you, it's great. But if it happens to you, you get help on the same pool. So it's help people helping other people.
Yeah,
Does it make sense? Does it make sense?
Yeah, that makes a lot of sense. Did you have any? Okay. Yeah. So I had another question. Just about like, with technology evolving and artificial intelligence taking over, how do you see your career and your profession in the future? Do you see AI maybe taking over your profession? Do you think there's like a need for you to still
Human element.
yeah, how a human element for this profession? Do you think that's very important, or do you think AI could take over everything?
Good question. I think that applies to all the industry, not financial industry. It's happening across, right? So short answer, it's not going to impact in my lifespan. It might be another 100, 200 years impacts. So what's happening is a lot of things they call low hanging fruits, right? A lot of automation happening already. Again, finance industry is also true. For example, when it comes to investment, right? I don't select what are the typical stock I need to pick to create a portfolio. So that has been automated. For example, I don't spend time, which is good, okay? Because that takes time. That time I don't spend time on, okay? So if I'm not spending that time on that, then where do I spend my time on? Then back to the human element, right? So I spend my time building a relationship, educating people, explaining, what is important for their family. You can really focus on advising, consulting, okay, as opposed to spending time on how to create a portfolio, because that frees up time to do high value add work, right? That's one. Second thing, it's the field very complex. I don't see the AI is going to automate a lot of complex thing. It might take years, but human element still be still there, okay? Because I don't think we're there yet to really, understand the human. For example, how do you understand, the human behavior? For example, is AI can understand what human behavior? We're not there yet. They can automate things, but I don't think can really build relationship with the human being yet, right? You still have human being has to be involved, right? So yeah, there are a lot of automation, which is good, which frees up my time. I focus on actually serving more family, right? If I'm able to serve only 5, I can serve 50, right? Because I'm not spending on time, which is kind of mundane, tactical, right? So I can reach out to more family. So it's all good, I think, because technology helps, right?
Yeah.
For example, I give example of phone. Okay, is it help you or hurt you? Because you're able to.
Yeah, depending on how you use it, for sure.
Yeah,
right. Makes sense. We're coming to the final minutes of our episode, so I guess we have one final question. But yeah, in your opinion, from the perspective of a financial advisor, how do you think we could improve the economy with everything that's happening right now, and how can we find a sense of calm and stableness?
You are in terms of the pandemic, you are saying, or in general?
Yeah. What can we do to make sure that we are secure, I guess? What can we do anything to like, not prevent, but like just feel a sense of security in unstable and uncertain times?
Yeah, so if you look at historically, there always been uncertain times, right? This is no different, this and another, I would say, just like another, events, a blip, in the whole grand scheme of human evolution, right? And I truly believe that human beings are always find a way to do things differently, right? Example, pandemic, you can see, we couldn't work together, but actually business done very well, certain business, because they're able to work remotely. Example, right? A lot of innovation happening in that pace, okay? And because of pandemic also, this challenge everybody to think differently, right? That, for example, some of the companies are announcing they will do 100% actually remote, okay? It has actually positive impact, okay, for the company. So think about a company, there are two benefits, actually helping the economy in a sense in that segment. So think about if you're running a company, you don't have to have a building, you have to rent anymore. That's a saving for the company, right? And also they found that because the people are working remotely, it improved their productivity. Okay, just think about They used to go to work, get up in the morning, go to work, drive maybe hour, then come back hour. People spend 1 to 3 hours commuting, okay, and get stressed out. So that time is available to work. So they found that people are actually putting more hours working from home compared to going to, go to work, right? So actually helping the economy, okay. So that in the pandemic, but in general, you can help the economy by improving productivity. The biggest driver of economic growth is improving productivity. What do you mean by that? If you can do the same thing in less time, what happens? You have free time available to do something more, okay? Which creates new product, new services for the economy. So productivity is the biggest driver for economic growth, okay? That is one. The second, when you're going to finance, when you save money, you're actually helping grow the economy. How's that?
Saving money, helping grow the economy.
Maybe if you invest it and like put it in the bank or stock, or like when you save money, you can invest it into something else that helps the economy.
Any saving helps, right? Whether it's a bank or in stock and bond, any saving helps the economy, because when you put that money goes to work for the economy, right? They're not sitting on the side, right? So for example, even if you put in the money in the bank is loaning out for business, buying a house, or that drives economic activity. So when you're saving also, it helps drive economy. So that's kind of two pronged to the answer, pandemic and in general, what you can do to improve economy.
Yeah. Well, that was a great answer. Yeah, thank you so much. I learned a lot, and also
oh my gosh,
got a great refresher of things that I probably should have known earlier. But this was really nice. And to our audience, if you guys have any questions, comments, or answers, concerns, please reach out, and maybe we can have my dad back to answer some of those if we need an extra episode or something like that. But I'm very grateful to have someone in my family to teach me about finance and make sure I'm secure in my future. So thank you.
Welcome.
And this was.
You guys doing a great job. I listen to some of them. When I drive, I listen to them. You guys are doing a fantastic job. Keep doing it. Spread the word. Education always helps. So fantastic job again.
Yeah, absolutely. To our audience, we will leave all the links in the description if you want to reach out to my dad, Dr. Prakash Muduli. I will put the LinkedIn in the description and anything else. And we will have a email at far from normal podcast 2020@gmail.com. You can send in any questions, comments, or concerns. We also have an Instagram at Far From Normal Podcast, a Google survey in the Instagram, so you can also send in any questions anonymously. We also have a Twitter, and it's Podcast Far, I believe.
Correct.
Yes. So you can also connect with us on there, and like and subscribe on YouTube, and we will see you in the next episode. Thank you so much.
Bye.
Bye.